Hello, everyone, and welcome into crushthestreet.com. I got an exciting interview for everyone today. The last time I spoke to James was during the height of the coronavirus pandemic, mayhem in stocks. And here we are now with seemingly stock euphoria. You know, it's such a turnaround that we saw since the trough of the coronavirus to now where we are today, post-election, even though we're kind of in the middle of that. But everything that's happened, it's amazing to think about all the things that we experienced in 2020. And here we are going into December 2020. James Corbett is on the line of the CorbettReport.com. He moved to Japan in 2004. He started the Corbett Report in 2007. And here we are in 2020. Visit the CorbettReport.com for more information. James, thanks for coming on the show with me today.
Thanks for having me. It's good to talk to you again.
Well, it suffices to say we are now in stock mania. We couldn't have predicted that in March, but here we are today with the quickest reversal in stocks from a bear market to a bull market than I think we've ever seen before. Maybe it's happened one or two other times, but my goodness, let's start here with where we are in the markets. What are your thoughts?
Well, as I've been talking about in my work for several years now, I think we have to understand what's going on, not just in the conventional terms. For example, we could look at the busting of the dot-com bubble and then the reinflation of that bubble by Greenspan with the housing put, essentially, in the housing bubble that grew in the early 2000s, which spectacularly broke with the subprime market in 2008 and was reinflated by the everything bubble, the QE infinity of Bernanke and the gang. We can look at it in that context, and so some people have called this the everything bubble that we're living in, but I've called it actually the reality inversion bubble, because one of the factors that we're looking at with regards to this never-ending stimulus that the central banks of the world really have been providing, but the Federal Reserve in particular in the United States obviously have been providing throughout this period of crisis, or what should be economic crisis, is the exact opposite incentive to the markets, which is to say that every time there is bad news, the markets read that as, hey, this is good news because there will be more of that funny money, stimulus money from heaven that's going to be pumped into the system and is going to inflate all the asset prices again. Yay, okay, great. So let's get on board. Let's all buy equities. That has been a massive signal for years and years now, where the central bank is creating the exact opposite incentives. Bad news is good news. And good news is bad news, but not as much as the bad news is good news. So we see this incredible rocket ride that equities have been on for at least the last 12 years. And that's crazy. It's counterintuitive. It's obviously not based on any market fundamentals or reality, but reality asserts itself, which is what they always say. And I think we're going to see that in dramatic fashion in the coming years as the economic effects that have already been baked into the cake throughout this year, let alone the ones that are going to result through subsequent lockdowns, will start to play out in terms of the monetary responses that are going to be necessary, coupled with the transition to the central bank digital currency paradigm that now the IMF, the Federal Reserve, the Bank of England, and others are lining up to talk about. We are going to experience economic disruption on a scale that I don't think people are even beginning to comprehend yet. And obviously the markets aren't pricing that in, we'll put it that way. And even if they are, pricing it in terms of dollars may not be the right way to price in what's going on right now.
Yeah, it's interesting what's the market is pricing right now. I mean, we've seen gold over the last couple months take some heat, pull back a little bit from its all-time high. And we're seeing that happen because of, temporary news, the vaccine, stocks hitting all-time highs. Recently, the announcement of Janet Yellen to be the new Treasury Secretary, which again is just, odd news that would cause the market to go higher, but it just fundamentals don't seem to really play a factor in what stocks are doing nowadays. And it's almost like, how long can that go on for? Is there a point where fundamentals ultimately matter?
Yes, I would say so, but we're going to find that out in some fashion or another, or one way or another. We'll find out whether or not there is a reality underneath any of this. And I think it is important to understand that what is happening right now is a tectonic shift at the monetary level, not at the financial level and not at the economic level, but at the monetary level itself. And to really wrap our minds around what that means, we have to look at the last major tectonic shift that took place in the monetary order. Bretton Woods, 1944, towards the end of World War II, as the Allies were thinking about how to carve up the world economy, and specifically America was looking how to formalize its takeover of the role of the British Empire as being essentially the world monetary empire, and the formalization of the American dollar as the center of the world monetary system, linked to gold, obviously delisted by Nixon in 1971. We all know that story, but that vision of that type of international coordinated shift over of the monetary paradigm is, I think, what is on the table right now. And it is no coincidence that you have Kristalina Georgieva and these other bankster type people talking about a new Bretton Woods moment at precisely this moment, as they are also talking about central bank digital currencies and how they can utterly transform the way that governments are implementing their monetary policies. This has knock down financial and economic effects that, again, are outside of the bounds and purview of most economic commentators and financial analysts. Are not thinking in terms of the base level of what they are actually working in, the currency itself, and how that is set to change. And I just don't think many people are keeping their eye on this ball, although that is the way we have to think about it. Just as Bretton Woods was the result not only of World War II, but also the incredible trade wars of the 1930s, the Great Depression. You could trace it all the way back to World War I and the incredible economic disruption that took place with that, the knocking of the old gold exchange standard in the 1920s. All of that incredible turmoil resulted in Bretton Woods. We are just starting to head into that level of turmoil that will result in the next monetary paradigm. And anyone who thinks they're going to ride this out by just investing in stocks is living in la la land.
Yeah, it's the stitching along of the system time and time again. And I guess I just don't know how far they can take it. You know, we saw what they did in the 2008 crisis with the bailouts and the banks and everything that happened as a result. And then here we are in 2020 thinking, oh my gosh, I mean, this must be it. You know, coronavirus, billions of people locked down at their homes. And again, they stitched things along once again in this new monetary system. You know, right when we think that we've hit a wall of what the governments are bound by economic laws, they take that another step further. And it's just unknown as to how far economic law can be manipulated and stretched. And so that's an interesting point you bring up, this monetary system. You know, I keep wondering if they're going to do some sort of bail-ins or you know, to the next level of, you know, seizing money from people directly if you got it in bank accounts nowadays. And that kind of bothers me when I see what's going on around the world. Any thoughts on that?
That is certainly one of the possibilities that is on the table right now. And I recently did a Questions for Corbett episode where I talked about the prospect of bank bail-ins and the legislative framework that's being instituted in various countries around the world, following on from the white papers that have been issued by the Bank for International Settlements, the BIS, over the last decade or so to make that possible. We saw it actually happen in Cyprus, and there was some fighting back and forth, and ultimately it got settled slightly differently than they were originally attempting to make it. But yes, they can and presumably will, in the event of some major economic disruption, give a haircut to anyone who happens to have any amount in their savings account over whatever arbitrary limit they set and whatever arbitrary limit they ratchet that down to. It can and will happen. That is certainly a possibility. And when we start talking about internationally coordinated central bank actions, like we saw in 2009, around the time of the April G20 in London, in the wake of that financial crisis, and we saw the first ever coordinated international rate cut, I think we could see something of that magnitude, international coordinated central bank actions around the institution of central bank digital currencies, et cetera. And in those times of changeover, that is exactly when you could see a bank holiday. And when your bank comes back online a few days later, you might end up with 50% of what you thought you had before, or something along those lines. It's certainly a possibility. And at any rate, we should be aware that that is a possibility so that we can at least start to think about how to plan for that.
Yeah. James, I don't know if you've watched a lot of these YouTubers that have just seemingly come out of nowhere over the last few months. Young millennial influencers talking about stocks, and a lot of millennials that are now diving into the stock market with this euphoria we're seeing, buying Tesla and EV companies and tech companies. And it's just, for me, again, in general, I understand this money is coming from the Fed and the money printing that we're seeing entering the stock market, but it just doesn't make sense to me that it's in the hands of all these younger generation millennials, which we're seeing, invest in stock at, crazy levels nowadays. But any thoughts on what's happening with this trend we're seeing since the March pandemic with these, specifically when it comes to young people buying stocks?
Well, let's differentiate between the public face of investing versus what is actually happening in investing, because as multiple studies have proven over the last several years, essentially the old myth of the mom and pop investor, just average Joe Q public holding shares, is becoming a smaller and smaller percentage of the equities markets. It is institutional investors and pension funds and those types of things with huge amounts of money that can and do move the markets. But yes, you're right. The new face, the new shiny face, are these young millennial upstarts, and they've got all these trendy YouTube channels and TikTok or whatever the kids are doing these days. I don't know, but that is just the face of it. And I could understand for millennials and youngers, people who are looking at how they will start to make their way through this world that they have been placed into, where they are at a much, much greater disadvantage than their parents' generation in terms of figuring out how to work through this. I could see their enthusiasm for stocks. And to be fair, I've always said that you probably will, if you're only simply interested in collecting dollars in your bank account, you probably can't go wrong by investing in the military industrial complex, helping to bomb brown children halfway around the world, because there's always business for that. And you'll never go broke betting on the Amazons and Walmarts and big blue chip companies that are crony in nature and politically connected and will survive the turmoil that's coming. As we have seen throughout the course of this year, of course, the largest corporations are making billions and billions and billions of dollars in extra profit, while mom and pop businesses are being closed because they're non-essential. This is a big signal to the market. Yeah, invest in the big blue chips because we'll protect them. Certainly don't invest in your own community, because that's going to the wayside. And I think they're showing that right now. If people just are solely concerned about chasing those paper dollars or those ones and zeros in their bank accounts, that there's the signal. That's the way to go. But I think there's more to the world of investing than that.
Absolutely. Well, let's get your thoughts on gold here in as we go into the fourth quarter of 2020, as we're in the fourth quarter of 2020, and maybe the bear market that's seemingly that we're seeing right now, in gold. I mean, obviously it's up big this year. It's very exciting, but since the summer, we don't have that same enthusiasm in gold. And some of your thoughts as to why.
Good time to buy, don't you think? I certainly think so. Because it is interesting to note that as this pandemonium was starting to develop and the world was starting to shut down, what was the first thing to start spiking and going crazy was gold, and not just gold ETFs or whatever. Physical gold started to become a highly prized commodity. And I experienced that here in Japan, trying to get some gold. Hey, what's going on? I don't know. Let's just get some more gold. And physically could not gain access to it. They were selling out and they couldn't get any more shipments. Oh, they're not shipping it now. So in times of crisis, precious metals have for thousands of years been the go-to investment. And in times where, hey, look at this craziness in the stock markets, it's taking off again, people will start to divest of the precious metals and head into equities. But we know where this heads long-term, which is that every fiat money currency that has ever existed in the history of humanity has collapsed at some point, except for the ones that are currently existing. So either you believe there is something about the US dollar that fundamentally changes the rules of economic governance and how the world works, or you realize we are in the American empire bubble that is seeming to be about to burst. And there are many ways that that could happen. And it's very possible that they could shift that system over without any of us really seeing it on the front end. They do the sort of back end magic at the central bank reserve level. That could happen with some sort of special drawing rights or whatever. But more likely, this will affect us. And when it does, the way that you will read that is not the dollar and how many dollars you have in your bank account, but what you can measure against that dollar. For example, how many dollars will it take to buy an ounce of gold? And I think we know that ultimately, when there is disruption in the markets generally, that price is going to go up, measured in dollars. So yes, I think any dip at this point is really just a reprieve for anyone who understands that real value, long-term investment value, is not going to be found measured in dollars. And people should be looking for not just precious metals, but certainly precious metals are one of the places that I would suggest people be looking into right now.
All right, James, I got to ask you about Bitcoin here and the environment we're seeing. Obviously, it's moved largely with stock. So we'll have to acknowledge that. It crashed during the March pandemic, badly. I mean, if you've been holding Bitcoin, you watched it go through a massive roller coaster this year. But market cap wise, we hit an all-time high already. We're at an all-time high. Who knows? By the time we post this interview, Bitcoin might already be at 20,000. We're at roughly on Coinbase $19,600 at the moment. What are your thoughts? What are your thoughts when it comes to Bitcoin in this environment? Are you bullish? Are you, is this expected? I mean, given what we've seen this year, kind of take us through this.
Well, several things to note. One of them is that part of the recent activity in Bitcoin has to be pinned on companies like PayPal, for example, announcing that they're going to start integrating Bitcoin, but not in a way that's actually useful for anyone who actually cares about Bitcoin and what it actually represents. No, it's going to be, you don't own your keys. You're not going to be able to trade in and out of crypto. It's going to be essentially PayPal will, don't worry, trust us, we'll handle it for you, which no serious person who actually recognizes what Bitcoin is for would ever use it for. But just that announcement did create quite a surge in Bitcoin price and the potential for hundreds of millions of new customers to be trading in Bitcoin, perhaps for the first time. So that is.
But so just to reiterate that is a use. That will be more people using Bitcoin, even though it's not for its intended moral uses and what it could be used for. But the fact that it is being used is adoption for Bitcoin, though, right?
That is true. More people will physically have, well, not physically, but will have access to Bitcoin and will be trading Bitcoin back and forth. And that is obviously part of the use value that is priced into what's happening with Bitcoin right now. But I say this not as a Bitcoin maximalist, because I do not believe it's all Bitcoin and Bitcoin is the only true coin and all of that. Personally, the only thing I'm interested in with cryptocurrency is its use as a way of trading outside of the central bank system. So I'm not particularly interested in all the KYC compliance, dot your I's and cross your T's and make sure you tell Uncle Sam about every penny you have in every crypto wallet. I am only interested in how we can avoid that system altogether. So, and Bitcoin, unfortunately, a lot of the development that's taken place on Bitcoin in recent years has been geared more towards compliance, KYC, Lightning Network, and other things that undermine that fundamental use value for cryptocurrency. Having said that, again, like investing in Amazon and Walmart or investing in the military industrial complex, again, investing in Bitcoin at this point clearly is going to pay dividends. To what extent and on what time frame you're looking at and all of that, I'll leave that to the economic and financial advisors out there. I'm not really, I don't do that. What I do, I am a hodler. And I am only interested in long term, will this be a store of value that I will be able to use at some point, decades down the line, if need be, in order to preserve wealth? And if not, then I'm not particularly interested in it. But for people who are interested in in the movement, I think there is definitely upside potential for Bitcoin right now.
Yeah, no, and it's exciting. It's exciting to have been part of it, and obviously to be rewarded for it financially. And I kind of wish we would see more of this action in gold. Gold seems to not give investors that same sort of euphoria. It's just, we get a move and then it doesn't continue. And not to be ungrateful for the moves we have seen in gold, but it's just different. Bitcoin drops and then it keeps on going. It moves and it kind of, I don't know, I guess that it's that adrenaline, that Vegas excitement that it has. It doesn't, and it creates momentum on momentum. And I feel like gold, because it stagnates and then you just see it, legs that fall out from under it, people get ADD with it and they lose interest and they get scared to hold it for the longer term.
Yeah.
Yeah. I mean, any thoughts on that?
Well, it's all about mindset. And ultimately, I think any viable, not just a commodity, not something that you can invest in, but a true monetary alternative will only result from a community of interest that is using that instrument self-consciously for a given purpose. And unfortunately, the big roller coaster ride of Bitcoin, the thrilling adrenaline rush of, hey, I just made 100% on my investment in 2 days, and I just lost 97%. Well, anyway, it's fun. That kind of adrenaline rush, unfortunately, tends to attract the wrong sort of people to create that community, to really create that alternative monetary paradigm, because unfortunately it gets day traders and people who are only interested in this as some sort of tradable asset that they can cash in on, which does not look like it will build the sort of community for long term. Again, as a hodler, I would be happy to spend my crypto if there was a way to exchange crypto directly for goods and services. No middleman, no changing in and out, no going through fiat. If there was more of a community around trading crypto for products and services directly, that's interesting and that's potentially disruptive. Everything else is just investing, and that's fine, but that's not particularly what I'm interested in.
Sure. Now, and understood. So would you disagree with someone such as Peter Schiff, who just is constantly berating Bitcoin, what it is? It's just a Ponzi scheme. It's just speculators looking to dump to somebody else that's dumber than they are to buy and hold the Bitcoin.
He's been wrong for the last decade. I'm assuming he'll continue to be wrong for decades to come. But isn't his son some sort of Bitcoin enthusiast at this point? I think.
I guess. Yeah, I've read that he buys, and I'm not sure. I think he's even addressed that, Peter. I get this point. I almost wonder if it's just part of his shtick. He's painted himself into a corner, and he sticks with it. And there's a lot of people who wish they bought Bitcoin years and years ago, and I feel like he's a good person to go listen to make yourself feel better about not owning it.
Yeah. Well, what's the old joke? Peter Schiff has successfully predicted 27 of the past 2 recessions, or whatever the joke is. Yeah. Broken clocks, sometimes right, but sometimes wrong.
I know. Yeah, it's hard to pick on people for, having wrong predictions, but I just don't know why he doesn't give up on that. I mean, eventually just acknowledge the fact that it's doing fine. Year after year after year, and people are adopting it and using it, and sometimes the arguments just don't hold water. The fact that it does have that first mover advantage means something. I know that you can create another Bitcoin tomorrow, but you can't create the network that Bitcoin has and replace it tomorrow. It's like trying to replace the English language in one day. Sure, a million other languages could be created, but I mean, the cost, the ability to actually replace it effectively, and the odds of it happening is very difficult. So a lot of that is not being discussed, and people hold on to just the easy argument of, hey, if you can't hold it, you don't own it, type of thing. But there's a lot more nuance to that people just are ignoring when it comes to Bitcoin.
Yes, there is definitely a mental barrier, and I don't know if it's necessarily generational, but obviously I note that it is often age related. But certainly there is a difficulty among certain parts of the population around putting their mind around something that is intangible, that does actually have value, that can be used by people in real life at this time. And they'll generally at some point start talking about, well, yes, but when there's the EMP that takes down the power for the entire world and we're all living like cavemen once again, then you won't have your Bitcoin. And it's like, well, yeah, we might have some other things to worry about at that time too. So when the argument ultimately becomes about some sort of Mad Max end of the world scenario, then I think we're talking about a different thing altogether. But yes, it clearly does have a use value in real life at this point, and people are cashing in on that quite literally at this point. And I suppose in Schiff's defense, I would say if you had come out in 2008, 2009 in the depths of the crisis and said, you should really be investing in stocks, you're going to make incredible returns over the course of the next decade, I and many other people would have been laughing at them. And also, in a sense, even knowing that, I still wouldn't back in 2009 have plowed all my money into the stock market in order to help inflate that bubble that was clearly being inflated, and trusting that that was some way of creating value or generating wealth in the world. It's still the wrong way. So Schiff's defense might be to say, well, the same thing with Bitcoin. I mean, yeah, the bubble's continuing to inflate, but one day when it pops, people will be in turmoil. Well, anyway, I don't believe that, but I'm sure that's something that side of the argument could say.
Yeah, and at some point you have to acknowledge you can't just invest in the inevitability of the world to turn into an ice ball. I mean, yes, it's going to happen, but is it going to happen in a meaningful time frame for you or me? And you just have to acknowledge what's going on in now in the next 10 years, next 5 years, because each day we're alive, we're mortal. We only got so much time on this earth here. So anyways, yeah, it's something that I'm constantly thinking about. I'm always thinking about, hey, what's going to be meaningful for the next short term, midterm, long term, and being prepared to be wrong. I think that's another thing I've learned is be prepared to be wrong and be invested in a way where you might be wrong too. So having said that, James, maybe some closing thoughts here on that topic, and obviously please let people know about your website as well.
Be prepared to be wrong is a very, very good lesson for anyone to learn, especially people who are interested in investing, because you are going to be wrong. No matter who you are and how smart you are going to be wrong at some point. And if you are not, as you say, invested in a way that covers those bases, then you are going to feel the economic pain of that until you learn that lesson. So yes, I'm not a Bitcoin maximalist. I'm not a crypto maximalist. I'm not a precious metals maximalist. I'm not any particular investment maximalist. I think that we do need to put our eggs in many different baskets because there are many different ways this could play out. And I certainly cannot tell you the exact way this is going to play out and the next step and the step after that. And more than that, I think anyone who does presume to tell you that is either knowingly lying or deluding themselves. And either way, you probably want to avoid people who are that certain of the future. So having said all of that, yes, everything that I say is my own opinion and my own perspective, but I always try to provide the source documents that I'm talking about in any and all of my work so that people can go and search it for themselves and come to their own conclusions. I genuinely exhort people to do that. So all of my work can be found at corbettreport.com, CORBETT report.com. It is all 100% completely for free. I don't ask people to support the work unless they are already fans of what I do and want to see it continue. Obviously, I do need subscribers to help me do this, but only if you are already devoted to the work that I'm doing would I suggest people support it. Just dip your toes in there because there's a lot of information on a lot of different subjects, including history and philosophy and science and economics and many other subjects that I think all tend to weave a fabric of a certain tale of this civilization that we're living in. And as I think, as any smart and sophisticated investor will know, you have to know a little bit about many different things in order to come to a good understanding of where you should be investing your time, your money, your effort, your energy, your everything else. And that's what I attempt to do at corbettreport.com is give people a lot of a lot of knowledge on a lot of different subjects. So again, just dip your toe into the water and see how it goes at corbettreport.com.
Well, if you enjoyed this interview, which I'm sure everyone did, please check out Corbett Report, James Corbett's work there. James, thanks for coming on the show with me once again. I look forward to doing this with you in very short order once again.
All right. Thank you.